What's up, everyone? It's Connie with MoneyVest. So markets here taking a nosedive to close out the month of April. NASDAQ down a little bit over 2%, the S&P down about 1.5%, and the Dow Jones also dropping over 1.4, almost 1.5% on the day. The entire trend on the day was lower highs and lower lows. There was absolutely no relief the entire day, and the markets just kept on sliding lower. Month of April was also down. NASDAQ was down over 4%. S&P was down over 4%. I think the Dow was down a little bit over 5%. So we continue to see some momentum lower with the markets kind of approaching that correction territory, even though we did see a little bit of relief earlier in the week and of course last week as well. The broader trend continues to be lower highs and lower lows, and that's exactly why I've mentioned this before, that we're not out of the woods yet. We still have to wait and see whether we're able to break out certain resistance levels or not. So in this video, I'll break down everything for you. As always, make sure that you drop a like and subscribe to the channel if you haven't already. And the links to our Discord and Patreon is going to be down below. Today is quite literally the last day. If you want to join it, of course, take advantage of that 16% annual discount. Starting May, it is going to go away, so please make sure that you take advantage of that. Again, few spots left. You'll have access to all the members-only private videos, including all the trade ideas and trade alerts, as well as our members-only buy targets and individual stock list, and all the options alerts as well. Now, before we jump into that further, this was the trend of the market. So again, significant lower highs and lower lows here on the day, with the NASDAQ down over 2%, S&P falling 1.5%, and the Dow dropping 1.5% as well, on the back of, once again, a very, very important Fed meeting to take place. This right here are my Tesla call options in just one day. Literally in one day, I was up a little bit over 70%. So this was from a little bit earlier, so it was up 59%. But as the stock price continued to drop, these options are now up over 70% with a nice $700 profit. Right now it shows 621 because, again, I said that it's a little bit earlier in the day. But as prices continue to fall further, this option was now up over $700 in just one day, because I sold this yesterday. And again, 60% in one day in Tesla covered calls. So again, if you want to get access to options here, link's going to be down below. Literally just one trade, and you pay for 3 years worth of membership to join our MoneyVest. And that's how beautiful options are, in my opinion. And again, you get access to all the members only videos as well. So 16% annual discount expires on May 1st. So link's going to be down below. So first things first, Dow tumbles 570 points to wrap up the worst month since September of 2022, and bond yields are also rising. It was notably an ugly April for the major averages and investors, with the Dow losing 5% for its worst monthly performance in September of 2022. The S&P slid about 4.2%, and the NASDAQ losing 4.4% as well. The Labor Department said Tuesday the Employment Cost Index, a measure of wages and benefits, added 1.2% in the first quarter, above the 1% consensus. And the Fed will make its interest rate decision Wednesday afternoon. So tomorrow, get ready, because we do have the Fed meeting, and I will be live to cover the entire speech and of course break down their statement. When you look at the size and scope of the scale of the rally off of the October lows, then you layer on top of it the stickiness of inflation in the end, I wouldn't be surprised to see some dampener on the market for a little period of time. This was Dan Greenhouse, chief strategist at Solus Alternative Asset. And NVIDIA traded into the red on Tuesday, losing 1.5% of the session, falling 4% this month. The favorite AI play for investors was up 5 months straight before this month, and shares of Amazon, another big winner of the bull market, dripped 3% in the session before its quarterly update due late Tuesday as well. And I believe Amazon was higher on the day. So if you come over to Amazon 4-hour chart, you'll notice it was up about 1%, so more or less flat after hours. Starbucks did drop quite a lot. This was 11.5% sell-off here after hours, after the earnings were reported. So, I mean, the markets obviously looks pretty brutal. This right here was the entire day. I mean, Microsoft falling 3%, Amazon another 3.2%, Google down almost 2%, Apple down 1.8%, Meta was down about 0.5%, NVIDIA down 1.5%, Broadcom, Qualcomm, Intel, AMD, Tesla was down 5.5%, the entire energy sector. So all sectors in the S&P 500, all 11 sectors in the S&P 500 were red on the day. In the last 1 week, a little bit of split market with utilities, consumer cyclicals, and comm services pushing higher and everything else down. In the last 1 month, again, utilities is the only sector that's kind of kept up. Everything else is down anywhere between 80 basis points to as much as over 6% in the last 1 month. This right here, cocoa prices, volatility was a little bit back higher again. Sugar prices, natural gas, and coffee prices selling off pretty aggressively. And Bitcoin, once again, tumbling down to under 60,000, and Ether also under $3,000 as well. Now, this is really interesting. This is quite crazy if you think about it, because now the market at least has some expectations for a rate hike. And look, I'm not going to pat myself on the back, but we've been talking about this for some time, that the stickiness of inflation, the fact that inflation is still elevated, still higher than the Fed's target, still not coming down fast enough, is really going to force the Fed to rethink their policy moving forward. It's really going to force the Fed to reevaluate the situation and what is the best path moving forward with respect to monetary policy. As I've said this time and time again, and I cannot emphasize more on this point, the Federal Reserve needs a reason. They need something to fix. They need an incentive to pivot. To pivot, they need an incentive. They need something to break in order to fix with interest rates getting cut down. Otherwise, if economy is strong, unemployment's low, and inflation's high, all those three things are a recipe for the Federal Reserve to keep interest rates where they are, or worse, increase them further to really rein in on inflation and bring it down. So the reason why this is crazy is because there is at least some expectation now that the Federal Reserve is actually going to increase interest rates in 2024. Just imagine how quickly we have shifted from 6 cuts down to 3 cuts, down to now just 1 cut, and with a possibility of a potential rate increase. And I did this poll in our community. I mentioned this in our Discord, where majority members were expecting now 1 rate cut, but there were a few that were expecting potentially a rate increase in 2024 if inflation doesn't come down fast enough. It's a new month. We'll get a new reading very soon. And of course, the Federal Reserve's tomorrow press conference and Jerome Powell's speech is going to give us a little bit more of an insight as to how they were approaching, the data point that's coming in from inflation and what is the path moving forward. But the idea here is that market expectations can most certainly be wrong, because at the end of the day, it's really just markets like you and I, we're kind of making the market altogether. And of course, the market can be wrong. Of course, there can be inefficiencies, and that's where the opportunities are. So there is, or has been, that repricing risk we've been talking about that's now starting to play out, because earlier there were 6 cuts. We got repriced to 3 cuts. Now we're getting repriced to 1 cut with a possibility of a rate increase. So of course, the markets are going to start to feel a little bit more uncertain about the future. Like, we don't know how many rate cuts, when rate cuts, whether we're going to see a rate increase. So there is a lot of uncertainty, and that's what's really causing the markets to pull back and drop even further with that correction. And of course, valuations were a little bit of an issue as well. We talked about how expensive the markets were, not to mention the bond yields, the treasury yields also rising, creating even more pressure on equities at the moment. So this is where we are. Again, rate cut expected in December now. So we're going to be dropping back down to 5% to 5.25%. And then, of course, in 2025, 1 more rate cut expected. So basically 2 rate cuts expected by the market over the next 12 months, with some possibility, very, very small, 1.1% possibility for a rate increase, which obviously would not be good news. Now coming over to volatility. So we were a little bit higher, up 6.5% to 15.6. I'm again going over the Money Vest Index just to give you a little bit of an idea on how it works. Again, I'm going to stop sharing the reading on our public YouTube videos. It's going to be reserved for members only eventually when the software is done and complete. But right now, as you can see, that we are looking at 3.3. So we did see a little bit of a downtick today. So you can see that we did see a little bit of recovery over the last week or so, and then today, of course, we saw a downtick as we come back down to 3.3 levels. So keep a close eye right on this, because the lower it gets, the better the buying opportunities. The lower we get down to, the more aggressive I will be to dollar cost average and buy into the market. Okay, keep that in mind. Just because the markets are selling off is not bad news. It's not the time to be fearful. It's not the time to panic. It's not the time to run for the exits. In fact, quite the opposite. Be more confident, be more calm and composed that, okay, market selling off is opportunities, deals coming my way, prices getting down to more and more attractive levels, risk reward is getting better, and I can finally buy high quality stocks at prices that I wanted to buy them at. So keep that in mind, and of course keep this in mind, of course, because this is where the risk reward comes in because of the formula that we have created. And I'll really be looking at 2.5 or lower. 2.5 or lower on the Money Vest Index is going to be absolutely fantastic for me to start dollar cost averaging back into the market a little bit more aggressively. So Ether, consolidating sideways. Unfortunately, it also does show us some lower highs and lower lows here. So you can see that we are continuing to kind of trade in this fashion where it's not really going higher anymore. We are consolidating sideways for the most part with the support, with the massive support sitting at 2,900. And Bitcoin also starting to break down below the support of around 61,000. And the next target, unfortunately, is going to be down at $51,000. Although there might be even some support here at 59.8 or 59.3, I should say, because we have validated here a couple times in the past also. So if you come over to the 4-hour chart, you'll notice that a couple times we have validated this level also. So keep that in mind. If you do end up breaking down further, next target is going to be 52,000 for Bitcoin. Now coming over to crude oil, we're starting to see a little bit of a breakdown. So $81 per barrel. So this potential head and shoulders is playing out, I would say, perfectly, because we did see the left shoulder, a head, and a right shoulder. If you do see a breakdown below this neckline of $81 a barrel, the next target, the next support is going to be down at $74 a barrel, and that's obviously going to help inflation moving forward, because we did get back to the positive territory for inflation as we discussed previously, because for the one full year it was negative because oil prices were down, but since it has been pushing higher in 2024, we have seen oil prices, energy move back higher to positive territory. So we really want this number to come down and be negative once again to kind of help inflation and then eventually help with interest rates. Coming over to the market, so starting with S&P 500 here, this is the support level that we were talking about at 5,080. We're once again selling off here, so we'll go ahead and turn this level back into a resistance. Now, what's interesting here with this pattern is that we are still, I would say, in a short-term higher high and higher low. So there is still hope, folks. I'm not saying that we're already done and it's time for a bigger sell-off and we're, basically coming down. But this right here is going to be the higher high or higher low. So this right here is the higher high. This right here potentially the higher low. So if you validate this number, if you validate this level here, there is possibility for a reversal back higher and of course a breakout beyond this 5,100 to as much as 5,110 to possibly up to 5,150 for S&P 500. But yeah, so this is S&P 500. Yep. So that would be a short-term uptrend. But of course, if you do end up, let's say, breaking down, if you take down this previous low, then we are back where we started, down in the 4,900s. And that would be a very, very strong area of support level to watch. And of course, a lot of that depends on what Jerome Powell says and how the Fed meeting goes. So keep a close eye on that resistance at 5,080 to as much as 5,100, 5,110, with the reasonable support at this higher low, all the way down to 4,950, 4,900 on S&P 500. Talking about the NASDAQ here, so NASDAQ also in a very similar situation. So we're back down below 16,000. So we'll go ahead and turn this level back into a resistance, unfortunately. But at the same time, I could argue that there is still a short-term higher high and higher low pattern, meaning there's still a short-term uptrend that the NASDAQ is somewhat following through on. So this could be the higher lows, this could be the higher highs for the NASDAQ at the moment. So we're still not completely done with this reversal. There is possibilities only if we do see a reversal tomorrow after what the Federal Reserve has to say. If you do get a breakdown, then next support is going to be down at the 15,300 to as much as 15,175. So I'm going to go ahead and kind of mark out a triangle here. And that would be the most important support level to keep in mind. Previous resistance also acting as a support. It's more like a range to keep in mind for the NASDAQ. It's going to be down here as a very strong support for the NASDAQ. Now coming over to Apple. So Apple here, 1.8% lower, 4-hour chart basically flat, so still consolidating sideways at a very strong support, as we've already discussed. If you do end up, let's say, breaking down further, the next support is going to be down in the 150s for Apple. Amazon, on the other hand, obviously selling off intraday. After hours, like I said, it was very, very flat, up just over 1%. So support level is going to stay put down at 170, down to as low as 159, 160 for Amazon moving forward. Tesla selling off quite aggressively, down about 5.5%. That's exactly why I sold the covered call in the first place, is because I knew there was a huge resistance and supply for Tesla in the 200s. It's not going to be able to break out above this level that easily. I promise I've got a video coming out on Tesla very, very soon. I just hadn't had the time to kind of go over the earnings or everything else. but Tesla video will be coming out very soon. Support level is going to stay put down at 177 now for this company, all the way down, of course, back in the 150s for Tesla. NVIDIA, on the other hand, really just consolidating sideways again, down about 1.5%. If you come over to the monthly chart, you'll notice it's the first monthly sell-off of 4% in the last 6 months. So 1, 2, 3, 4, 5, 6. So in the last 6 months, the first sell-off for NVIDIA on a monthly basis. And usually when we have seen a monthly sell-off, it's kind of accelerated further in the following month, because last time you'll notice that in October. Before that, you'll notice that in actually December didn't really happen, but before that it happened in August and September of 22. So we'll again find out what May has in store for the markets and for individual stocks here. But overall, we've got NVIDIA, of course, trading at a valuation that to some would be considered very, very overvalued, to some maybe not so much. But resistance is going to stay put roughly at 906. Support level is going to be staying put down to 843 for NVIDIA. Advanced Micro Devices also seeing a little bit of a sell-off. Resistance is going to stay put at 164, 165, and support level is going to stay put inside this green rectangle, sitting roughly in the 150s for AMD. Talking about PayPal, and PayPal reported earnings, gapped up, and then gave back all of those gains. It did somewhat break out above this previous resistances. So I would give credit to PayPal in terms of making a nice higher high. So at least it was able to kind of retest highs of $70, but it wasn't able to stay up there. So it kind of recovered, basically, gave back all the gains here and sold off. So intraday, huge red candle, lots of selling pressure, and of course coming back down. So support level is going to stay put down here now, $65, $66. So that is going to be that level to keep in mind. And I will be doing a video on PayPal also. Looks like they missed on EPS, beat on revenue. So we'll be talking about PayPal in more detail in another video. Talking about Visa here, Visa also selling off, rightly so, because the valuation was a bit too high, and I'm not interested in Visa at these prices, but support level is going to stay put down to 265, down to as low as $249, $250 for Visa. Meta Platforms, and Meta here continues to perform not so great in the short term. So it is down from its all-time highs, a little bit over 18, almost 19%. Resistance, massive supply sitting at 455 to 475. Huge support sitting down in the 386 for Meta moving forward. Talking about Netflix here, also down 1.5%. Support level is going to stay put down to 536. We still have a lot to come down to before Netflix starts to become more and more attractive. But it's actually not part of my 30 stock shopping list yet because of the cash burn and because of the cash flow situation with Netflix. But it's still a very strong company with an excellent moat. But there's a lot of competition, unfortunately, for Netflix. So support level is going to stay put down to 535, down to as low as 475 for Netflix. Talking about Google. And Google here also selling off, filling this gap almost entirely. And after the huge breakout on new all-time highs on earnings, it's down now over 6.5%. Rightly so, because it was, again, very, very overbought. So we're starting to see some exiting from the L3 banker oscillator, down almost 2% on the day. Next support is going to be staying put down to 161, down to as low as 150 for Google. And then finally, we got Microsoft breaking down below that support here. And the next support is going to be down at 364. Let the prices come to you. Let the prices come to you. There's nothing we need to do. We need to just be patient and let the prices come to you. That's the beauty of investing, is that you don't have to make a decision. You can wait until the price is right, until you are patient enough for sellers to be selling you a stock at a reasonable and a very discounted price. So next support is going to be down to 364. And then finally we come over to Costco, and Costco here also consolidating sideways. Support level is going to stay put at $705. Resistance back up to 747. Lots of consolidation sideways here. And Enphase also pulling back 4.5%. Massive support sitting roughly at 106. Still trading inside this downtrending channel of lower highs and lower lows also. So hope you all enjoyed this video and a quick update on the markets. Again, we will be live to cover the entire Fed speech and the press conference. Make sure that you join us. 16% annual discount expires tonight. So if you want to take advantage of that, link's going to be down below. As always, happy investing. I'll see you all in the next video.